Could the U.S. economy be on the brink of a sharp downturn? A top economist warns of a 30% stock market crash and an almost inevitable recession this year. Gary Shilling, a renowned economist with a history at Merrill Lynch, has issued a stark warning about the U.S. economy. Known for his accurate predictions in past cycles, Shilling now says a recession is almost inevitable in 2026. His reputation adds serious weight to this forecast, making investors and everyday Americans pay close attention to his outlook. According to Shilling, the stock market is poised for a significant correction. He warns that the S&P 500 might tumble between 20% and 30% this year. This decline would mark a severe bear market, driven by elevated stock valuations that many experts now see as unsustainable. If this happens, it would wipe out billions in market value and deeply impact investors. Shilling points to multiple economic weaknesses fueling his recession prediction. Key factors include a weak housing market and a slowdown in capital spending by businesses. These trends often precede recessions, as they reflect reduced consumer confidence and corporate caution. Combined, they suggest the U.S. economy could lose momentum sharply in the months ahead. One major concern Shilling highlights is the high valuation of U.S. stocks. When stock prices rise faster than earnings, valuations reach levels that historically have been followed by sharp corrections. This disconnect means the market is more vulnerable to shocks and negative news, increasing the risk of a steep decline in prices. If Shilling's predictions come true, the U.S. could face a challenging year. A recession combined with a 30% stock market drop would affect jobs, retirement savings, and consumer spending. It would also likely prompt responses from the Federal Reserve and policymakers attempting to stabilize the economy. Preparing for volatility could become essential for investors and households alike. You need to stay informed and prepared because a recession and major market drop could impact your savings, job security, and spending power. Watch closely, consider your investments, and subscribe to stay updated on this developing story.